All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street from Main Street. Starting off the S&P 500, you can see we had a weekly close below this pivot here. We talked about this last week. Any close, daily or weekly, really, a close below this pivot would be problematic. We also closed below this green bar here, which we talked about last week, being an inside bar. We had a nice potential bullish pattern there. On Monday, we closed below that, so we negated that. And really, the market was weak pretty much all week. You did get a little relief bid Wednesday, Thursday, and Friday you gapped up a little bit, and then you can see we just sold off really all day from the gap up there. Triple Q's taking a beating as well. At this point, I've worked on some correlations here, and we've pretty much followed the same exact pattern. I think we're going to head down to 400, and I'll show you why here. So we moved all the way down here, obviously that big leg down. Then you put in a low here and then went sideways. That'll thrust higher, little pullback, and then kind of a double top, almost made a higher high there. And then a 1, 2, 3 down, little doji candle, and then a gap up, and then two kind of, relief bid days here, and then a flush lower. And then you had another leg down, you made a lower low, and you put in another big bottoming candle, right? So this is kind of similar to this candle in the sense that it was massive and it marked a big low, high volume, right? Then you came back up, chopped sideways, put in a little higher high here, just like here, and then 1, 2, 3 down, 1, 2 up, gap up, inside days, 2 inside days, gapped up, and then flush lower. So if we're repeating this pattern a third time, things come in threes here, and the market is just, every time we get a bid, it could be a bid for an hour, 90 minutes, a half an hour. They're just selling every single bounce we get. So at this point, given where we are technically, we're still pretty oversold in my opinion, but at this point, I think we got to go down and test 400. It's pretty much just got to get out of the way here. So we have this gap here on the spiders, and we never really back tested that. So that was the breakout gap. You got the 400 whole round number. You got a gap here, a breakout. You got all this chop in here. I think that's where we're probably headed here. If we look on the weekly, we also have this big trend line there and that 100-week moving average just below. So maybe, on a panic, it could pierce a little bit. But my guess is we have to go down there and test that. And we'll probably put in some type of a low after the Fed. You can even make a case. You got this down-sloping trend line here, right there. So right in this zone here, there's a ton of support. I know that the market has been weak lately, but trust me, they will defend this level. Buyers will come in, shorts will cover. And I think it's probably going to happen around the FOMC time if I had to make a guess. So I would probably look for weakness earlier in the week, and then we probably get some type of a bid here after the FOMC, really regardless of what they say. The market right now is just looking for certainty. That's really the problem. That's why it can't catch a bid, because we don't know what's going on with Russia and Ukraine. Yes, we know there's a war going on, but there's no certainty as far as the outcome, and that's really what the market is looking for right now. Furthermore here, I believe I showed you this chart last week, but so here's the bull-bear ratios again. You can see in March 2020, we crossed over, and price didn't reverse immediately, and I'll show you why. Here we are here. We crossed over last week. I showed you that, and price has obviously kind of continued lower a little bit, but I still believe that this is suggesting we're near a bottom here, and I'll show you why. So if we look at the option chain for next Friday, this is options X. It's also a quad witching OpX, so keep that in mind. You can just see the open interest here. There's no calls in the system. The only real notable area of calls here is at 435. You have 44,000, and then you got 51,000 at 440. But it's also straddled there with 53,000. All the big numbers here are all puts. I mean, it's 172,000 at 400 there. 69,000 at 405, 66,000 at 415, 82,000 at 420. There's nothing. There's hardly any 5-figure numbers here on the call side. So that tells you that there's a lot of puts in the system to burn. Now, why that's significant? So if we go back to March 2020. We look here, these red lines represent OpX. So that line, I showed you the bull-bear ratio crossed over right here. and price didn't reverse immediately, but here's your options X, sold into options X. As soon as that was over with, you ripped higher. So again, I think once these hedges are unwound, that's when we'll see the market rally here. And again, the market just needs certainty right now. It doesn't have it, and I think the Fed will at least give it that. And I don't expect any surprises. Powell has been pretty, clear in telegraphing what he's going to do. He's not trying to surprise the market, especially not right now. So essentially, that's kind of my thesis moving forward here. I know we were looking for some type of a counter trend bounce here over the last couple of weeks. That hasn't happened yet, and at this point, it looks to me like we're probably headed down to that 400 level, maybe on a panic pierce, down to 395 or somewhere in this trend line here. But again, you have so much support in that area. 100-week moving average, that trend line, the gap fill, this little downsloping trend line. So there's a lot of things to look for there over the coming weeks. Anyways, let's just flip over the triple Qs really quick. Same kind of deal here. Let's get rid of this one. But yeah, you have this downsloping move here, and that could potentially take you down to 300 on an overshoot. But again, let's take a look here. Here's your previous all-time high. You got this pivot down here. There's a lot of support in this area. And, it's getting more oversold. And if we dump out, it's going to be even more oversold than it already is. So that's kind of where I'd be looking for some type of a tradable bottom here in the triple Qs. Inside of tech, semiconductors, again, pretty weak. Lost this pivot low and this pivot low on a weekly closing basis. So just not a good look here overall. Again, lots of support here, 100-week moving average, a lot of chop in this range. So if it pushes lower, there's a lot of demand down there for price, but overall looking pretty weak in the near term. IGV still holding that double bottom for now, but again, just in a weak technical position here. Weekly time frame, again, still a lot of support down in this range here. So it's not like you have that far to go before you get to a major level here. And you got that 200-week moving average underneath that, and then this previous all-time high here. I don't think we get down that far just yet, but those would be your next levels there on the IGV. All right, so let's flip over to let's cover the Dow really quick. So the Dow, actually, let's use the diamond here. So diamond did lose this purple trend line here, which coincides with that low. So again, just like the spiders, lost that green bar low from the 24th on a weekly closing basis. So again, this is probably headed a little lower levels here on the Dow. You're going to have support right in this range here around 320 and maybe a little bit lower around 313. There's a lot of chop in here. So again, not that much farther to go here. But again, it does appear that the market wants to go down and test those levels here at this point. If we can take this same trend line here, if we flush down, there you go, 315, somewhere in that range there. The one thing about the one indice that is kind of bucking the trend is the Russell right now. So the Russell, we talked about this, it made more of a double bottom, not the lower low. It'll be interesting if we flush down, does this make a triple bottom? Does this make a lower low? Does this hold up? So watching that very closely here is the Russell, surprisingly, this is supposed to be a risk on index, and it's actually holding up the best out of all of the indices right now, at least from a technical positioning. But I tell you, if the Russell loses these lows, though, you've got a long way to go. So you got the 200-week moving average, you got this previous all-time high, you've got this high here, this big gap. The Russell's got no support, and that's the problem when you just gap up every day. There's no support, there's no supply, and it when you push lower, it's pretty much you go down as fast as, if not faster than when you went up. But in any case, Russell hanging on here a little bit better than the other indices. Anyways, transports getting rejected here at the 50 moving average on the daily, pulling back off this trend line. You could make a case you have a kind of slight inverse head and shoulders here. But again, if the market dumps out, this is not going to play out. But again, your levels here, that was actually, the transport's actually holding up pretty okay, considering. But again, your level support here, down here, 14.2, that's going to be your master level. And obviously this trend line is a bit of local resistance. And then if you get above this area, about 15.8, 15.9, that would be pretty bullish for the transports. All right, yields. So yields had another strong week. And again, I told you guys a week or two ago, this is just a pullback pattern here. The yields are going to move higher. I don't think they're quite ready to break out yet. I still think they need to do a little bit more backing and filling. Again, especially if we have a a push lower in the market, that could cause a flight to bonds in the short term. So there's that to consider, but I still think yields still have a another move up higher here, but had a strong week this week. I don't think they're quite ready yet, though. 30-year, again, making a new high this week. So, again, just a pullback pattern. I think if it does a little bit more MACD filling, it's pretty much cleared for takeoff here. But big move there for bond yields. Also, high yield debt getting smoked yet again, losing that 82 handle. You got this pivot down here at about 80.50, and you got this chop in that range. So that could be an area of support, but the credit market is not very good right now. We talked about the broker dealers last week. These are the guys that sell bonds and all credit and all that stuff. They lose these pivots. I mean, they defended it this week, but if you start losing these pivots on weekly close, this thing's got so much downside. And just like the Russell 2000, this little area here, that's really your only area of support. It's all straight up, little chop, straight up. You got that 100 week moving average right there. But outside of that, that's it. So this is not a good look here. And a lot of these banks have a lot of exposure to some of these foreign banks, European banks. By the way, have you guys seen the Chinese stocks lately? Tencent has been absolutely slaughtered. Look at this perfect bear base here. I mean, this is a textbook bear base. You might say, well, look at all this support it's got in here, all this chop. Yeah, but look at how much you consolidated. That's a textbook bear base. I think this is going down to 43, probably 41 at this point. I did some numbers on it last week for some of the members, and I said 43 bucks, but this thing's got enough velocity that could get down to 41. Alibaba, take a look here. Again, this is into a little bit of support here as well, but I think this goes down to 65. Honestly, these things are not. I would avoid them right now. I know China's trying to do it. They're trying to talk with the SEC to try and figure out some type of a deal here, but right now, with how weak the market is, these things are just, even Baidu, and this is the best one I think by far. But even Baidu's, you can see kind of a weekly bear base there. Potentially Pinduoduo, same thing. Look at that perfect textbook inside bar there on Pinduoduo. So these Chinese ADRs and a head and shoulder pattern there as well on a weekly head and shoulder pattern. So these ADRs getting absolutely crushed right now. Just like a lot of things. But anyways, let's flip back over here, get back to the rest of the video. So XLF, kind of holding on to these pivots again. So it's holding up better than the broker dealers. Again, a little bit less exposure to those credit spreads, but again, not a very good look overall. It's hanging in there. If the market gets a bid, this will get a bid too. But again, if you lose these pivots, you got a long ways to go. Again, you got this little chop there, but outside of that, there's not much there on the XLF. All right, let's talk energy. XLE. Not really, kind of an uneventful week, all things considered. So, just kind of sideways. So here is Monday, Tuesday, Wednesday, Thursday, Friday. So a green week, but you put in that doji there. And again, volatility starting to increase at the top. It could be a little distribution up here. I don't know. Maybe some insiders know something about Russia and Ukraine. You do have a big doji candle after a big run, so it's possible. But if things worsen over there, these stocks will go higher and energy will go higher. So just keep that in mind. XOP, same kind of look. OIH, same kind of deal. I believe Jason actually just did an article about a specific oil play that could be very undervalued if energy prices stay very high. So if you guys aren't a Patreon, go check that out. But crude oil. So did take a nice dump this week on Wednesday. We actually had a nice gain on this. We took a little lotto play on SCO and got about 17% on that. So that was a nice little trade. I didn't want to hold into the weekend. I thought we would get down to that 20 moving average at least, but crude held up into Friday. They kind of defended this level here. You did kind of have an hourly, look on the 4 hour, there is a little bit of a bearish pattern here. So you see that big red bar and you're kind of inside of that. But going into the weekend, who knows what's going to happen? They could, we're this geopolitically driven right now. So we could get news one way or the other. Oil could dump to 100 or 95. It could also gap up to 120 for all we know. So we covered that going into the weekend, but a nice gain. Is this a top for oil? I'm not exactly convinced of that. It could be. I mean, that's a big red bar there. But again, it's very geopolitically driven, and despite all of the issues that the United States is trying to find new supply, it's not going to happen right away. And I showed you guys last week, what happened in 2008. The market topped out. Oil kept going higher for pretty much like 6 months. So if we follow that same kind of pattern, history is just kind of repeating itself here. I wouldn't rule out another move higher here in oil, although I'm not sure how much long it lasts before demand destruction takes over. I'm already hearing about people talk about, I'm not going to take this trip, or, I am going to do this and maybe have a staycation this year. So there's a lot of dynamics going on right now. But in any case, oil coming back in pretty sharply here. If we take a look at the weekly, pretty good reversal candle there. All right, nat gas. So I talked about this last week. I don't know if it was on here, but I talked about it all week long on my channel. Basically just looking for a higher low here. So you put in these higher lows, you did that. We talked about this nice bullish pattern. You got a pop, came back in earlier this week, and then put in potentially a higher low. So if you can take out this high, there's nothing to say you can't make another run at double top there. But more importantly, net gas is holding up in the near term. Nothing too new to report this week. Dollar index continues to be strong. I told you guys months ago, 99 bucks. Got up there on Monday, 99.41, spot 8. Got above this red bar high here on Wednesday too. So dollar remains strong. You do have a bit of a hanging man candle, which is potentially a bearish candle, and you're going into a lot of resistance. So dollar may need to pull back a little bit, but it's going to be, I don't expect it to pull back too sharply here. At least not right now. There's tons of money leaving the European Union and going into dollars. So dollar index is strong right now. All right, gold. So gold is acting a lot like crude right now. So we had that reversal earlier this week and then kind of dipped down on Friday and then kind of bid right back up. Again, it's trading with crude. I think I have a pretty good idea of what gold is going to do over the next 12 months or so. I need to see kind of like the next turn here in the market. And I did a video on this earlier last year about kind of like long-term price projections and cycles for gold. And I think it might be lining up a little bit. I have to see a little more here. We kind of went up into double top. I mean, I didn't expect this move to happen this quickly or at the time that it did, to be honest. But we got right up into double top there. So obviously going to be a resistance zone. We'll see what happens here over the next couple of weeks. If the geopolitical stuff continues going on, this can remain elevated and probably will remain elevated. So just keep that in mind. But if we get some type of resolution, it doesn't matter what the resolution is. It doesn't matter what the resolution is. As long as the market gets certainty, this will probably have a good correction. But I need to see the market turn first, and I'll have a better idea of what it's going to do over the next 12, 18 months. Anyways, silver, kind of same look here. Nothing too different really here to make out. Platinum pulling back, hitting a bit of a bounce on Friday. Palladium also, after this parabolic move here, pulling back into this this zone that it broke out of. So trying to hold that for right now. But again, these things are parabolic right now, and they are because it's a fear trade. Copper. So interestingly enough, copper pulled back pretty much all week long. So we'll see if this ends up being a fake breakout. You close back below that 463 level, and it got through $5 and then reversed and closed lower. So lost a lot of those gains from the previous week. We'll continue to watch copper here and see if it can, see if it continues lower or if it can retest the highs. All right. So Bitcoin. Interesting. I got the weekly chart here. This is Ether. Let me flip over to the daily. So I drew this on yesterday. You could make a case you're kind of wedging a little bit here on Bitcoin. And the level I'm watching here is this green bar low. So that would be 37,467. So any daily chart close below that, or really below this trend line, could potentially open the door for a move to 30,000. But until then, you're still inside of this green bar. So that's the positive. And, you got a little pop here the other day, pulling back. If you get another bid here, I think you can possibly go back up and test this trend line again. If you do that, and it breaks, that would be like extra bullish for Bitcoin, probably extra bullish for the market too. But I don't think that happens. I think we pull back off of that if that happens. And I still think Bitcoin's headed lower. If we go over to the weekly, again, I've been talking to you guys about this. We do have this little green bar kind of bullish pattern, but it's inside of a larger red bar. So the macro pattern's bearish. And as long as this red bar high holds, this is heading down to probably 30,000. And again, the head and shoulder target would take you down to about 17. So if that were to play out, Bitcoin's headed lower. Ether, you can see the same thing here, weekly inside bar. And then you have a smaller bullish inside bar that hasn't been negated yet, but it's there and it's inside of a bigger red pattern. All right. Flipping back over. So essentially, to recap, I still think the market's really, it's a little overdone here to the downside, but that doesn't mean it can't go lower. Ultimately, there's a ton of bears in the market. And, I keep hearing retail is buying every dip. Well, maybe they are, but I'm looking at the put chain and it's suggesting the exact opposite. So we'll see what happens here. As soon as we get more of a definitive bottom, and by that I mean, not one that lasts for a week, one that we get like kind of an ABC up or some type of a higher high, I'll know exactly where the market's going. I did a lot more cycle work last night and today, and some long-term cycle work too. So we'll see what we get out here. I think we'll probably have some type of turning point in the next 2 to 3 weeks, if not by next week. And we'll see what we get from the Fed. But, again, be careful in this market. Don't take any unnecessary trades. Don't over-position yourself. Don't over-leverage. Just nibble at positions and only buy quality setups. Anyways, guys, I'm going to wrap it up here. Come find me on carnivoretrades.com. Come find Jason on his Patreon. You guys take care, and I will talk to you all next week.